Joining us right now is Amos Hochstein. He is the senior advisor to President Biden for energy and investment. Good morning to you. Let's talk about energy prices first, because the good news is, you know, if you thought going to get a gallon of gasoline and seeing those signs on the corner all over the country, that was a sort of sign of inflation and where things are. The good news is that's down. The question is why you think it's down, and as down as much as it is.
Well, first, good morning, Andrew. It's good to see you and to be here. The oil prices are obviously down, as you said, quite a bit. We're now down to almost $70 on Brent and below $70 on WTI here in the United States. And gasoline prices are down to below $3.25, which is, I think, 60 cents below where it was a year ago. There are a few, and we're doing the oil prices are coming down despite the fact that we have these tensions in the Middle East and tensions between Russia and Ukraine are still, that war is still going on. Both are big oil producing regions, and despite that, oil prices are coming down. Now, they're coming down because of two reasons. One, despite the OPEC cuts, production in the United States and production in a few other countries are at all-time highs. Here in the United States, I think we're at 13.4 million barrels a day, which is the highest we've ever had historically, and that seems to be holding. So it didn't just peak and go down; it's peaked and hold. And the other reason is that the demand in China seems to be a lot softer than people thought. And I think that as we see the economy continue to grow here in the U.S., but a little bit sluggish in other places, and specifically in areas that are energy intensive, I think we've seen some of those prices come down.
Well, that's where I was going with it, which is how concerned, just on a more global or geopolitical basis, should we be about the fact that some of these markets are struggling, and whether we're going to catch that cold from an economic perspective?
Well, I think what we are seeing now is what we've actually thought for several months, that the Chinese demand is low as a result of the economic data there and slowdown overall in the economy. Despite the fact that in the U.S. The economy is held very strong, we still think the economy is pretty strong here, as you know. And demand for energy products in the U.S. is still high. Our diversification in energy means that we can export more and when we need to, and use what we have, the energy production here. So I think I'm not that concerned about what it means for the U.S. economy, except for the fact that it helps with reducing the pressure of inflation here in the U.S. But, you know, when oil's at 80, everybody talks about, will this cause upward pressure and inflation? When you get to 70, people start saying, well, does this mean the other side? I think we're probably in the best place that we can be with $70 oil. Maybe we still have a little bit of room that it can go down with helping American families and consumers overall with lower prices at the pump, at the grocery store. And as you know, Andrew, there's so much connection between energy prices and food prices. So when energy prices come down this way, so many other things for American families come down at the same time.